Welcome back to F.A.C.E, Pavel. How are you?
Hear me now?
Hear
Hello?
you now, Pavel.
Oh,
How are you?
great.
You hear
Thank you.
my intro about you? I remember what my guests say most of the time. And if you want to share your screen, your first visit here, you were very constructive natural gas stocks. And that's when we had that big spike in natural gas. So, anyone could be right, flip a coin.
Mm-hmm.
Last time you came in and you were talking about the VIX, and when were you here in January,
Mm-hmm. Yes,
February? And you were
January.
talking, yeah, all right, you were talking about the vulnerability and looking for lower numbers in the market, and that manifested too. So great work.
Yeah, thanks. Maybe I was lucky twice.
What's that?
Maybe I was just
Lucky?
lucky 2 times. Who
Oh,
knows?
yeah, I know. When I try and pretend I'm humble, I say, "Oh, I was just lucky." But so I know a lot of work goes into it, and sure, we're all wrong at times. And what do you have for us today? What do you
Okay,
want to talk
so
about?
yeah, today I want to talk about metals, specifically copper,
Okay.
because I think there's an interesting opportunity on copper. And I like it from the medium term perspective in a similar way as the previous opportunities like the nat gas and the VIX.
Okay.
So I have prepared a few charts. No, here it is. And by the way, I already spoke about this opportunity to the people who use the premium version of our software. So it's not exactly new, but I think it's still valid. And like I said, it's medium term, so I think it will play out in the coming months. So it's not about days or not even weeks. So here's the price of copper, and it's been in a strong uptrend since the COVID bottom in March 2020.
Yeah.
But the momentum is slowing down, and I think copper is quite vulnerable here in the medium term.
Oh gosh. Okay. Thank you, because I'm sure.
Yeah, so that's
And you know what? A couple of weeks ago, when the precious metals were screaming, that's when copper reversed up there at $5.
mm-hmm.
Okay, so you think it's vulnerable short term, and then intermediate term, you're looking to buy the next big break to about 3.5?
I don't know how low the price would get,
Yeah,
but I mean, it depends on the macro environment. But right now, what I see is that the liquidity is tightening due to the
yeah,
the inflation and the subsequent monetary tightening, or the tightening in the monetary policy by the central banks around the world. And that's one thing. The second thing is that the major economies are not doing exactly great. Especially the manufacturing is slowing down, which is the prime consumer of copper. Copper is, I would say, one of the most important metals for emerging markets, especially China. And China is also not doing exactly great.
yeah,
There are some lockdowns and so on, but this is short-term stuff. But even in the medium term, they have a huge debt problem. They are trying to balance their economy from the investment-oriented market into consumer demand-oriented. But it's a long game, and it won't happen overnight, even if they are successful. But there is no guarantee they will be successful in this task. So there are many catalysts that can send the price of copper really low. And if we get a liquidity crisis, then that would be really brutal for copper. In such a case, I would not be surprised for the price to drop, I don't know, by tens of percent even to $3 or $3.50, that would be, totally possible. You can take a look at the previous recession. I mean, true recession, true bear market in 2008.
Yeah.
And you can see how the copper dropped from, $4 to $1.50.
Yeah.
So these are my opinions, and it's not wise to trade opinions. I prefer to trade the data. So let's take a look at the data. I mentioned the price action, which looks, the price is still an uptrend, but the momentum is slowing down. The market is overbought, which is evident when I show you the commitments of traders' data here. And
you don't find many copper bears anywhere.
Yes, exactly. There is a lot of talk about EVs and green energy and incredible demand for wind turbines and batteries and so on. This is true, but this is long-term stuff. And there is one thing I would like to stress is that of course, you need copper for that, but you also need other metals and energy. And the bottlenecks right now are not in copper. They are elsewhere, especially energy, because copper is, even with regard to the situation in Russia, because Russia is a major producer of nickel and some catalytic metals and energy.
But not copper.
But not copper. Chile is the most important producer in the world. So there are bottlenecks elsewhere. So in the long term, yes, copper will be very important, even critical metal. But in the medium term, I think there will be a surprise to the downside. So like I said, the market is pretty overbought, which is visible on the commitments of traders' data. I can zoom it out even further. I won't go into details as we don't have time for this right now. But the most important piece of data that's actually convincing me this is about to play out as I expect is the market structure. Because as I said, the price itself has been really strong, even right now. But when you take a look at the spreads at the contango in copper, it's actually pretty weak. Here I have the bull spreads for copper across the term structure curve. On the top is the nearest bull spread between May and July 2022. Then we have July, September, September, December, and December 22 and March 2023. And you can clearly notice the divergence between the underlying, which is the purple curve. Purple curve is the price of copper futures, and the spread. Usually, these bull spreads correlate positively with the underlying itself. These spreads are more sensitive to the situation on the actual physical market. So I think this implies there is no stress in the physical copper market. On the contrary, it shows that the market is well supplied, and the recent uptrend since, March, the beginning of March, is not really supported by the fundamentals. So you can see the divergence, not just on the near end of the curve, but also on the back end of the curve, which is even more important. So
there's no backwardation in copper like there is in energy.
There is a backwardation on the back end of the curve, but the near end, I can show you the copper term structure, so we can see how it looks like. Here we are. So there is a slight backwardation.
Oh, I see.
On the near end of the sorry, not backwardation. There is a slight contango on the near end of the curve, but the backwardation on the rest. But the point is, the backwardation is becoming less severe, and as you saw, here it is. The front end actually flipped back from the backwardation back into contango. I think it will be visible when I show you how the curve, yes, here it is. you can see how the curve looked like a month ago, which is the gray curve. You can see that even the near end was in backwardation, but this is no longer the case. So the market is becoming more loose structurally, and even the back end is moving away from the extreme backwardation towards less severe backwardation. So this is one of the most important pieces of data that I think speaks for the bearish thesis. I also have seasonality over here. It is not as important due to the wild situation in the markets because in such times the seasonality tends to be less reliable. But nevertheless, you can see that there is some sideways action till the end of April, and then there is a seasonal downtrend. But once again, I don't think this is
July.
Yeah, I don't think this is as important right now.
How are you recommending your subscribers play it? Through futures, through copper stocks? How are you positioning yourself for your forecast?
Basically, we try not to recommend anything to our users because every trader has its own risk management, risk tolerance. So we avoid doing this. But personally, there are many ways how to make use of this opportunity. First of all, the most simple is to short futures. Right. I would pick some more distant expirations personally. Another way is to use options, but it is more complicated. So I would recommend this only to advanced traders. A smart thing to do would be to utilize the spreads, I mean the bear spreads. For example, we have a signal in our app. By the way, you can find it over here. These signals are generated by a machine learning model, so it's all mechanical. Which means it's not a recommendation. It's just alerting you about opportunities somewhere in some markets, and it's your duty to do a proper analysis. But we have a signal on bear spread in copper for quite a long time, and this might be a great way to handle this opportunity because, as I said, these spreads, these more distant spreads, are still in backwardation, and if we get a true sell-off in copper, then these spreads would flip into contango. So this is a way to trade it with a lower risk because obviously these spreads, are not as expensive as the underlying itself. For example, I have a tool, the dollar calculator, and you can see that this movement corresponds to some, $700. Which is not much compared to the underlying itself. So this might be interesting. This might be an interesting way how to play it with smaller capital. And the final option might be ETFs. There are some inverse ETFs, so that might be another possibility.
Do you have symbols on inverse ETFs on copper?
I don't know right now.
Okay, I'll check it out later.
I know the normal ETFs, the CPER and JJC, but these are not short. These are normal, long ETFs. So I don't remember the tickers for the short.
But you think Freeport-McMoRan? I know that they have other metals. Do you think that they could be a good short candidate if your copper call is correct?
Yes, actually, I was looking at the chart of FCX a day or two ago.
I see a topping formation developing there.
Yes, I think it looks very similar to the price of copper itself. Maybe a bit stronger, but these movements in equities are always somewhat overblown. They act as leveraged assets compared to the underlying commodities. But the asset, the stock itself, I think, is losing momentum. So I agree with your conclusion that it looks like it's topping, or it's creating some sort of a some sort of a complex local top. So that might be a good way to play it, especially using options, because these options are not as expensive as the options on futures, and they are also not as complex because you do not have to delve into the black model and so on. So it's definitely a good idea, but you have to keep in mind that, like I said, these stocks, these miners act as a leveraged way to play the commodities. So the volatility would be naturally greater than on the copper itself. So that might be another option.
And give it to me. Give me that volatility, Pavel.
Yeah.
All right. Great presentation. Is that your main thesis for today? And have you covered it all?
Probably yes. Maybe I would show you another final chart, because there is another way how to play it out, how to play it, which is through an intermarket spread between copper and gold.
Okay.
If we get a recession, or basically if copper gets hit in a liquidity crisis, there is a decent chance that the copper gold ratio, or the spread between copper and gold, would also move down. I have the price of copper, a long-term chart over the past 20 years on the top over here. And below, there is a ratio between the price of copper and gold, continuous contracts. And you can see that despite the price of copper going up, the ratio, the copper-gold ratio, is moving nowhere since March 2021. And as I said, if we get a recession or something like that, I expect this ratio to break down. So that might be another way to play it with less
short copper, long gold, right?
Yes. And you can see how it behaved in 2008. It cratered too. Of course, the risk is lower, but the profit potential is also lower compared to the copper itself. But that's a feature, not the bug. So
I like that. You know what I say about those two metals, Pavel? I say copper is about construction and gold is about destruction. So in a recession, copper would be pushed aside a lot faster than gold.
Yes.
So
I mean, if we get a true liquidity crisis, gold would get hit too. You know, there's no doubt about it. But it would be hit much less than the copper itself, due to the reason you just said. Copper is basically industrial metal, very sensitive to construction and manufacturing
and rates.
And rates, yes, you are correct. So,
all right, well, what a great presentation. I have a feeling you're going to be 3 for 3, lucky 3 times in a row in your interviews, and wondering if you could send me your good luck charm.
And we shall see.
The best way for people to follow you and get in touch with you, Pavel? Yeah,
thank you. Everyone can, check out our software, the Spreadcharts app. You can go to our website, spreadcharts.com, where you can sign up for our software. We also have a free version, and it's not just some kind of demo. It has plenty of features, so you can just sign up and check it out yourself. All these conclusions I'm making, as you saw, I use our software, so I think it provides a pretty decent edge in the markets. So that's it.
I think you have a discretionary view that you use your work to confirm what you're thinking.
Yes, but like I said, I don't trade my opinions. I trade the data. You know, that's the way to go. So because I can be, opinions. I have opinions about everything, but if it's not supported by the data, then it is of no use.
Okay, and when you have a debate with your wife, do you bring in your data to support your side of the argument?
Yeah, it doesn't work that way.
I recommend you just stare down at your shoes until it's over. So anyway, Pavel, I really appreciate you coming by. Look forward to having you back, and good luck on this forecast to you and your subscribers and anyone who takes it to heart here. And I appreciate you, being here on F.A.C.E and having a giving spirit to share your time. And the best way, people could even check out things for zero before they go to your premium.
Yeah, sure, definitely.
Okay.
So
All right.
yes, thank you for inviting me.
Yeah, you're a great guest, Pavel. You make it easy for me.
Thank you.
And I'm rooting for you and all the people that follow your work, and look forward to us doing this again sometime this summer.
Great, great.
All right,
Looking
everyone,
forward.
Pavel Hala, and you could find him at spreadcharts.com. Also, that's his Twitter handle, at spreadcharts.com. And want to thank you, my trading warrior brother, and everybody. You could join the team in about 20 minutes, 25 minutes on the Morning Edge. And thank you for your attention. And Pavel, people are thanking you, Monica, Hugo, Mark, our international audience appreciated what you presented today.
Great,
okay?
Thanks. You are
all
kind.
right. All right, everyone. So that's a wrap. Good hunting today, and we'll see you all tomorrow. And Pavel, thanks again. And all bull markets are roofed in copper, so maybe that's going to be part of an ongoing correction in the stock market too. Yeah,
that would be great.
All right, take it easy.
Thanks.
No, go ahead. Did you have something to add?
No, that's. I think that's all.
I've talked enough, haven't I? All right. Well, thank you, Pavel. Have a great day. Thank you for being with us. And that's a wrap. That's a wrap, everybody. Have a great day, and we'll be back here on F.A.C.E tomorrow.
Goodbye.
Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.